Hello from Otet Markets, this is Sahura with the short review on European Central Bank meeting and decisions that they made. And also we will see how market reacted to these decisions and numbers that we had. Uh, Actually, we can say this European Central Bank or ECB had no other choice than cutting the rate by 25 basis points as it was widely expected. We know the economic condition in the Eurozone is getting worse. The GDP increased only 0.4% previous quarter. Inflation is low, around 2.2%, but not because that they made that so good job. It's because that the demand is lower in the Eurozone. So this lower demand by the consumers helped the central bank to be able to control the inflation. So the main reason of lower inflation in the Eurozone is actually the lower demand. As we can see in the retail sales numbers and in the consumer expectations, when we see as the consumer expectation, emotions, and market emotion, all of them they show that in the Eurozone, we don't have such a bright future to look further. Looking at on the geopolitical tensions, we know there is a war in Europe. Yeah, the Ukraine is a part of the Europe. The Ukraine is involved in the war with the Russia, two European countries. They're in a war, so it will affect whatever if you want or not. It's still continues affecting the markets. On the political front, we know the uncertainty in France and in Germany, in the two biggest economy of the Eurozone, for sure will affect the markets. We know the changes that happen in the government in France, and also the future election, which is in just a few weeks in Germany. We have to take all of them under. We have to take in our consideration. We say that okay, with these data, we can say that the economy in the Eurozone needs some support, and these support has come from the European Central Bank (ECB). Part of it actually it can come from the ECB side. So the ECB had no other choice than cutting their rates. That was the reason that that ECB cut their rates by 25 basis points to 3% from 3.25% as well expected. At the same time, we had some important data from United States as well. Let's review of them also a little bit, just part of that. We know that yesterday we had U.S. inflation numbers. Today we had producer price index, or the PPI inflation, producer inflation. As you can see here in the chart, the producer inflation on the monthly scale increased by 0.4%, much more than 0.3% of the previous month's revised number, and also 0.2% market expectation, which means in annual scale, the PPI in the United States increased to 3%, much higher than 2.6% expectations, and 2.4%, which revised to 2.6% of in a previous month. Generally, these data, and also excluding the oil and energy prices, core CPI also increased by 3.4%. Much more than 3.2%, and in line with the same number of the October. These numbers, they shows that the inflation is still sticky. The producer inflation increased, which means that the consumer inflation also can increase in next months. Generally, with these numbers, the labor market data also we had in the United States, continuing jobless claims fell to 1,886 from 1,870. Yeah, it was a little bit more than expectations, while the jobless claims also, initial jobless claims also increased to 224 from 218, 242 from 225, which increased to 225, which still these numbers and these data says that the labor market with 242, still the labor market's getting cooler, it's like getting slightly slower, but still this is strong. And still we have a good condition in the US, while we have a very while the economic condition in the Eurozone is still worrying if you compare these two numbers and these two data together. With these numbers, we can say that the Eurozone, in the Eurozone, as the markets, we can say like that since the central bank cut their rates, so in the initial reaction, yeah, the stock markets can take advantage of that. So with the can take advantage of that, but as you can see, stop Euro Stoxx 600 full. Let's go into the chart. I can show you better in the chart. With these numbers, yeah, an initial reaction can be positive in the stock markets. And we can say, let's check the Euro Stoxx EU50. Where is my Euros 50? Euro 50. Here is the Euro 50. The initial reaction was somehow the positive as the cut interest rates cuts can support the stock markets, but that was not what that's not something that we can rely on that in the long term, because the reason of the cutting these rates is because of the currency in the Eurozone, and also we can say that there are also too many requests from the Eurozone that to cut the rates not by 25 basis point, but with the 50 basis point. These higher expected rate cuts means that with this 25 basis point rate cut, the stock market cannot take advantage of, cannot get encouraged too much to increase higher. So the stock market, yeah, can have the first initial reaction positive, but generally it's not something that can support the European stock markets so far. The last weeks, European stock markets mostly was pushing. It was pushing by mostly the U.S. stocks and with the tech stocks, technology stocks that we had increasing. But generally, the stock markets in Eurozone still they have some more concerns compared with other economic areas. As for the currency, economy is weak. Economy is weak. There's so much worries about economies, and also at the same time we had the lower interest rates. So the interest rate is cut by 25 basis point, which means these again the negative sign for the euro against this cross, especially against USD. As technically under 1.06, as long as the euro USD is trading under that, under this level, we can say that the downtrend can continue further more strongly. Generally, euro is negative. Euro stocks euro against its cross, especially against USD, is negative downside. And on the stock market, we cannot rely too much on the initial positive reactions. This is what happened in the Eurozone and what happened in European Central Bank meeting and market reactions. Hope it was useful. If you had any other question, do not hesitate to write under this video. I will try to get back to you as soon as I can. Have a good time. Bye-bye.